Ladies and gentlemen, welcome back to another episode of our Thrive in China Roundtable. For those of you that are new to our Thrive in China Roundtable, this is a weekly roundtable that we organize every single Wednesday on different topics surrounding corporate administration in China. So there are topics around incorporating, setting up business models, looking at legislation around accounting, tax regulations, corporate governance, etc. So welcome to today's roundtable. A little bit about our firm. Woodburn & Accountants is one of the leading business setup and corporate administration advisory firms. We specialize purely in inbound investment into China and Hong Kong. We eliminate the complexities of corporate services and compliance administration. Our services range from trademark registration to incorporation services, employer record services, all the way through to accounting, tax, payroll, corporate governance services. We try to meet the objectives and goals of our clients, so we can always tailor make and fit these services to fit what our clients' needs actually are. A little bit about myself. My name is Christina Kohler-Colucci. I'm the head of business advisory at Woodburn Accountants and Advisors. I have been dealing in this sector for the last 20 years, focusing on China corporate services, corporate administration, and corporate governance. And I've helped over 700 odd international companies with their market entry strategies, developing business models, advising on implementation, as well as then on growth and scaling in the market. Today's roundtable is the blueprint for success, your ultimate guide to China's incorporation process. Now, the purpose of today's presentation is to provide a very comprehensive guide. So bear with me, everybody. It is going to be a long presentation today. It is a comprehensive guide on the intricate process of establishing an entity in China. We're going to go through 4 different chapters within today's presentation. Navigating the regulatory landscape, we're going to be touching on the new company law, choosing the right business structure, documentation and procedures, and then risk mitigation and compliance. So let's get cracking with today's presentation. Navigating regulatory landscape, this is a perfect chapter to start on because on the 20th of December, China adopted the new PRC company law. This new PRC company law is going to take effect as of 1st of July, 2024. In this presentation, at the point where we're discussing different topics, I am going to be discussing how this new company law will affect the registration process and the decision-making process for companies. Significant changes have been around corporate governance, i.e. the roles and appointments of people within the corporate structure, registered capital, as well as equity transfer. I'm not touching on equity transfer today because that's not part of company incorporation and company establishment, but I will touch it on future roundtables. Now, excuse me, it is really important that people are aware that the regulatory landscape continuously changes. What you do need to also be aware of is that when a regulation comes into play, it's done so in Beijing, and then it filters out into all the other cities within China where there is a room by that city to interpret that regulation in different ways. Now, as this new company law only came into fruition on December 20th, it's really still too early to say anything because the actual implementation will only take place July 1st. What is going to happen? We all know that in Beijing, these things will be implemented. Whether these things are then implemented in places like Shanghai, Guangzhou, Shenzhen, Ningbo, Wuhan, Nanjing, Chengdu, Chongqing is then to be seen. Next, we're going to be looking at choosing the right business structure. And for me, there are 9 key decisions that have to be made in 4 areas of the incorporation process. All of these decisions should be made prior, or need to be made actually, prior to the actual establishment of the company. Step one is looking at the structure. So it's looking at the types of entities and the business scope. It's looking also then at investment capital and term of validity. Step two is looking at the people, understanding who's going to be the shareholder, who's going to be in the corporate management structure. Step three is looking at location, understanding the Chinese company name regulations and registered office address. Step four is finance. It's looking with which bank you want to operate with, your value-added tax status, and who you're going to appoint as finance manager. So step one is structure. What are the types of entities that you can establish, and how does this impact your business scope? So there are numerous types of business entities that can be established in China, okay? The terminology that I have used on this slide is terminology that when you do your own research, you will find yourself. But you have to go more in depth. The representative office is a liaison office. It is very much tied to the shareholder. It can generate no revenue, cannot invoice, cannot generate revenue. It is purely a cost center. Yes, it does allow you to employ people, but there are also limitations on who you can employ and how many people you can employ. And money is transferred from the shareholder to the rep office to just pay for these expenses. No revenue can be generated. All the other structures I've highlighted here, WFOE, FICE, DOE, JV, are limited liability companies. Okay? The terminology you're seeing here is in reference to who the shareholders are and what's in the business scope. WFOE is a limited liability company that is fully 100% owned by an entity or an individual based overseas, i.e. a foreigner. FICE, this is a limited liability company where the business scope is commercially oriented in terms of trade, and it is owned by a foreign investor. DOE is any type of limited liability company, any limited liability company that has any form of business scope owned by a mainland Chinese individual. Joint venture is usually in reference to a foreign party and a Chinese party. Of course, you can have a limited liability company that is owned by two foreign shareholders, but that still falls under WFOE or FICE. Joint venture is really that you have a mainland Chinese partner and a foreign partner, still a limited liability company. And then you've got foreign invested partnerships. This structure is a type of partnership that is really seen only in the legal profession. So law firms are held by partnerships, as well as accounting firms are held by partnerships. Apologies, I've got a bit of a flu. Now, in most instances, the business activity that you are going to be performing in China will dictate the type of entity that you can choose. If you are in an industry that is restricted or prohibited, then most likely you are forced into a joint venture structure where potentially, depending on the industry you're in, the Chinese party has to hold more than 51% of the shares. Okay. When you look outside of the restricted and prohibited sectors, and you can find the list of these sectors in the negative list, which continuously gets updated year on year. Anybody who's not in that negative list can freely open up a company in China, but you need to specify the activities that you're going to be doing. So to give you a bit of clarification, when you register a company now in China, you do an online application on the COC website. There is a drop-down menu for the business activities you can choose from. You have to pick the terminology that they've allocated in this drop-down menu. This drop-down menu has over 1,000 different activities. okay? So it's really important to take a piece of paper and really outline all the activities that you are going to be doing. Now, in China, unlike in Hong Kong, where I know how to run a business, in Hong Kong, you just write import-export on your business license, or you write education sector, or you can be so vague, but you can also do activities outside of that. At no point will you ever get in trouble, unless you need specific licenses, additional licenses. In China, your business activity, you have to stay within that realm. Your auditor at the end of the year end will check that your transactions are prescribing to the business scope that you've allocated in your business license. So it's really important to list out what your business scope is. Now, as an action plan for everybody who is interested in setting up an entity in 2024, my recommendation is take a paper, write all the activities, all the product services you wish to perform now, that you wish to perform within the next 5 years, that you wish to perform within the next 10 years. I just got off a call today from a company who has an immediate need to set up an entity, which is all well and good. But my next point was, is there a future need once this immediate need expires? There is no point setting up an entity and going through the hassle and bureaucracy and headache of setting up an entity in China to only have it for a short-term period. The setup process can take between 2 to 6 months. The liquidation takes up to 2 years. So it's not just on a whim that you say, tomorrow I need a Chinese company. No, you have to make sure that you really want this company for the long-term duration, right? And that's why I say, take a paper and look now, within the next 5 years, within the next 10 years. Another thing I would recommend doing is research your competitors on what their business scopes look like, especially those that are already in China. Try to understand what they look like. This also gives you a little bit of a benchmarking exercise to see whether they're doing things outside of their business scope. It does not mean that your business scope can be identical to theirs. It just means you're researching your competitors to see what they're doing. Now, this information is easily accessible on the COC website. You need the Chinese name of the company and also preferably the Chinese address so that you have the ability to research that. We want your business scope to be as broad as possible. So when we look at your activities over now and 10 years, we accumulate all of that. And if no additional licenses are required, then our recommendation is to put all of that in one go, so you don't have to update it at a later stage. Keep in mind that the COC will probably amend, adopt, maybe even downsize your business scope, may even consolidate certain items into one line item. So be aware of this cleansing that they might do when they go through what you've allocated on the online application. Decision 2 is around the capital investment and term of validity. Now, registered capital is a tricky concept. It is your working capital. So when you register your company, there are 2 numbers that need to be provided to the COC. One is your total investment, and the second one is your registered capital amount. The registered capital is the money that comes into your bank account, and you use that money to fund the startup of your operations. So if you say that you need $100,000 US dollars to fund the operation, that $100,000 US dollars comes into this bank account and you use it. The registered capital is a ratio against the total investment. The difference between the registered capital and total investment is what is called your foreign debt loan. This foreign debt loan is what I consider as emergency funds. It comes in if you run out of cash and you need more capital. Okay? Now, it is really important to understand that there are no minimum capital requirements in China. It is really important for you to analyze when you're expecting to earn revenue in order to be able to sustain the operation of the company until you're able to break even. This will help you in calculating how much capital you actually need. The biggest problem I see with most of my clients is that they run out of capital relatively quickly. You need to budget for enough cash. Cash is king in China. And you have to remember that if you decide to grow and scale, everything was going to cost more. Generally, salaries are underestimated, especially in places like Shanghai, Beijing, and the tier 1 and some of the tier 2 cities. Salaries are coming on par to the Western world. People underestimate social insurance and housing fund calculations. They also underestimate rental prices. Costs are increasing in the market. So it's really important to sit down, budget for the project, and understand how much capital you actually need. Now, on this slide, I've made a comment that I'm always hesitant to highlight, but I highlighted it today in 2 calls. If you plan on transacting with state-owned enterprises, with large privately held Chinese companies, they may have their own due diligence process on working with suppliers or contracting with suppliers. And they may say, we can only work with you if your registered capital is at least 1 million RMB, if not more. So when you are talking to your clientele in China, be brash and ask them, we're planning on setting up a company. We're going to localize the business. Is there a minimum amount that we need in order to be able to become a supplier of yours? I have worked with some big companies who do a due diligence on me. I have to fill out this supplier information data, and they do ask these questions. So make sure you fulfill this criteria. Now, my rule of thumb is to analyze how much capital, not only how much capital you need in the first 12 months of operation, but also understand your financial cash flow analysis, future analysis, your forecasting on how much capital you'll need over time, okay? Try and do a 3 to 5 year projection and see what makes sense for your company. Now, the next point I'm going to relate to the new company law, which just came out, capital contribution. If you now say that you have decided on a registered capital of 1 million RMB, the new company law, which again comes into implementation 1st of July, and is also impacting all existing companies already registered in China, that the capital, the registered capital, needs to be fully paid in within 5 years from the establishment date, i.e. the date that's listed on your business license. For companies already established in China, it is not clear yet, which is why we're waiting for the detailed rules of implementation to understand how many years do we have. But in addition to that, whereas previously you were not allowed to reduce your capital contribution, i.e. your registered capital amount, as of 1st of July, you are allowed to reduce your registered capital. But I'm very curious to see how this is going to go, because in the past, this was not possible. Very rarely could you do that. I'm really curious to see how that application is going to go, that you can reduce your capital. A tip from me would be calculate what is needed. Try and make the assumption you can't reduce, because I'm not sure how that's going to go through. I can only tell you really in the second half of this year. So make the assumption you can't reduce, but you always can up it up. So if you would need more cash, you would have the ability to do that. So if you're making your 3 to 5 year forecast and you're saying, actually, in the next 3 to 5 years, I need 5 million RMB in cash. Let's be a little bit now careful, and let's say, all right, I'm only going to state 1.5 million. I know I need that in the next 12 months. I can put that money in. If we then have to increase it, we know our cap is actually 5 million. And then just go through that step of increasing it over time. Now, previously, registered capital used to be injected based on the term of validity of the company. Obviously, with the new company law, that's no longer the case. Woodburn, our business license, states that our registered capital can be injected within the 50-year term of validity. My term of validity still remains 50 years. Obviously, with the new company law, I have to inject that capital now, potentially in the next 5 years. You do have to allocate a term of validity. The minimum is 10 years, maximum is 50 years. There's no right or wrong in the number that you choose. Just understand that 6 months prior to the termination date or expiration date, you have to start the renewal process. Step 2 is people. So the first thing I want to look at is the shareholder. And again, there's no right or wrong in terms of the shareholder. It can be an individual, it can be a company. All I want you to do is, if you are a foreigner, and let's say you're from the UK, analyze with an international tax advisor in the UK what makes sense for you. Does it make sense for you to establish the company as an individual? Does it make sense for you to use your UK company as the shareholder? Create tax simulations if you're repatriating dividends, etc. What makes sense? Look at double taxation agreements. If you're planning in the long term to sell the business or acquire new investors, what does this mean if you're an individual or company? This type of analysis work has to be done with an international tax advisor in your home jurisdiction in conjunction with a tax advisor in China as well, okay? A big question that I get is, do you need to consider an offshore holding company? I think you have to be really, really careful with offshore holding companies for the main reason that if you cannot show to tax authorities in China that these companies have economic and commercial substance, then you won't be able to utilize the preferential tax treatments in the double taxation agreements that are set. In addition to that, if the Chinese tax authorities see that the effective place of management is not even in these holding companies, you know, there are going to be issues that arise. So really what I'm trying to say is, when you're looking at the shareholder, try to utilize an active company, an active trading company, and not just a holding company. What about utilizing the gateway to China, which is Hong Kong? Again, a question I get asked quite often, because historically, Hong Kong was always utilized as the holding structure, if you will, to go into the Chinese market. A lot of people did it as a protectionist method, if you will, putting something in between their operational entity in the UK, let's say, and their structure in China. All of this is currently in 2024 all mumbo jumbo. Most people are investing direct into China. If you need Hong Kong or if you need Singapore as a regional APAC hub, and you want all of your APAC operations to be under that holding, okay, totally makes sense to have Hong Kong and Singapore. If you already have an existing entity in Hong Kong and Singapore, again, in my mind frame, it makes sense to put that China entity under it. But again, investigate, look at the double taxation agreements. I mean, ideally, you want to create a structure, an overall global structure that makes sense for your business and where you are optimizing your tax situation. The fourth decision that has to be made is looking at the corporate management structure in China. So this is the corporate management structure. There are two options. One is that the shareholder appoints a board of directors. The other alternative is that the shareholder appoints the executive director. Okay. Board of directors needs a minimum of 3 people. Executive director is just 1 person. Generally speaking, the board of directors will have a chairman of the board who, according to the old regulations, will also be the legal rep. GM can be somebody else. When you choose the executive director route, the executive director is also the legal rep, is also the GM. And then you have the supervisor, which comes separate from that. Now, according to the new company law, you have greater flexibility in terms of the people that you are appointing in your structure. Meaning that if you want to have 1 person as executive director, another who is legal rep, another who is GM, by all means, you can do that. The new company law is also dictating more lenient rules and regulations for people that are in these roles, meaning that they have less liability against them. However, I just want to highlight, it is still really important to get a director's liability insurance to make sure that all the people that are appointed in these roles are protected in the Chinese market. One of the new company laws as of 1st of July is that supervisors are no longer mandatory for limited liabilities companies that are smaller in size. Again, we're going to have to wait for the details of the implementation, the guideline the details of the guideline implementation or implementation guidelines to understand what small qualifies as. I don't know what that qualifies as. I don't know whether it's related to registered capital amount, forecasted employees. I don't know. So let's all make the assumption that the supervisor is still required. Because again, we don't have clear guidelines on that just yet. But just know that is what's written, that supervisors would not be required for smaller organizations. Now, one of the biggest downsides or difficulties that I've seen in the last 3 to 4 years is that a lot of individuals within companies are not willing to take on these roles for political reasons, moral reasons, ethical reasons, liability reasons, etc. It's really important to understand what these roles mean. What are the responsibilities? What are the liabilities? And this has to be an education process for everybody that is in that corporate structure. Now, I also have people who don't want to take on these roles, and so hire people in China who become employees who do take on those roles. When these newcomers take on these roles, it means they are taking on the full responsibility of the company. And that means all that investment capital you put in is at their beck and call because they are the ones authorized to handle strategy, the day-to-day, etc. So you're basically putting money into their fingertips, you barely know them, and they're managing. I find that very risky. Everybody has a different risk threshold. As I mentioned here, delegating power always requires a degree of trust. I think trust is earned, and I think it takes time to build trust and loyalty. As such, it's really important to develop corporate governance strategies, implement measures that will mitigate the risks to you as the shareholders, and mitigate risks also on the running of the Chinese subsidiary. Now, it's really, I'm talking to a lot of companies at the moment who want to incorporate in China. And theoretically, they have everything in their mind in terms of strategy and all of that. I think the difficulty comes into, once that entity is set up, how are you actually going to operate it? Who are the decision makers? Who is authorized to operate the bank accounts? Where are the licenses and chops going to be kept? Who's going to be appointed for the different roles and who's going to take responsibility for what? Are you going to hire an accountant? Are you going to outsource those accounting functions? And these are all decisions that really should be made prior to the establishment of that company so that once you are set up, you can kick off because all of these decisions have been made and you can implement because you know who's doing what within the organization. Understand the pros and cons of keeping the chops in China, keeping the chops overseas, understanding where the person who's authorized to access the bank account is based, which bank are you going to operate with, who's going to manage the online banking platform, etc. These are all really important decisions that have to be made prior. Step 3 is around location. We're halfway there, guys. I know it's a lot of content today. I apologize, but that's the way it is. It's a lot of decisions that do have to be made. Step 3 is around location, and decision 5 is on the company name for China. So main considerations. Number 1, the name must be in Chinese. Okay, first and foremost. When you are registering with the COC, you are registering a Chinese name. Your English name is not seen anywhere. Okay, remember that your Chinese name reflects what you do. understand whether it's a big image point. At Woodburn, we cater to foreign investors. In fact, almost nobody knows what our Chinese name is unless they are have their own accounting team and they receive our fapiaos. That accounting team will see our Chinese name. We don't market using our Chinese name. It's not seen anywhere. Why? Because we don't place a value on it. We've done it. We've chosen a name purely for the registration purposes, and that's it. Now, I did choose a Chinese name that is feng shui acceptable, that reflects certain levels of power. I could not do a direct translation of Woodburn because when we did that direct translation, burning, using the word burn has very negative connotations. So we just came out with a name out of the blue. But understand that there are more and more companies being established, especially in these bigger cities like Shanghai, Beijing, that to find a name is not so easy. The format of a name is like this. It's company name plus the business type, which reflects the business scope, city formation, and company limited. For us, if I highlight our English name, we are Woodburn Management Consulting Shanghai Company Limited. We we found a Chinese name for Woodburn, which is 3 characters long. Management Consulting is our business type because our business scope dictates everything around accounting, business advisory, information consulting, etc. We're established in Shanghai, and then company limited. So understand the formatting of the name. This is a standard flow of what the name looks like. So questions to ask your management again about the operation of the business is, how important is the Chinese name to you? Are you looking to brand your Chinese name and register it as a trademark? Is the trademark, domain name, Chinese name company important? Do you need to have a very solid name of the Chinese company? If you do, then my recommendation would be to work with a marketing agency. Most marketing agencies do these types of name creations, which I think are fabulous. And you can absolutely do a check whether these names are available for trademark registration and domain registration. When you establish your company, you're doing the Chinese company name registration. This application has absolutely nothing to do with the trademark registration nor with the domain registration. And there's absolutely no guarantee that you can utilize that same name for all 3 registrations. So think again wisely what you want, what you need, and whether it can come into fruition. Do that research, again, before you establish the company. Decision 6 is that you do need to sign a lease agreement for a registered office address even before you start the application of the company. Kind of a vicious circle. Location is probably the most underestimated decision that people make. And actually, for me, it's where most companies fall into a trap, where they choose the wrong location, and it causes difficulty in the long-term establishment of their business. I am not here to help you choose a location. This is something where you have to look at your strategy, look at where you're going to find people, look at where you want to be based. You cannot just say, I set up in Shanghai, whoops, I made a mistake. Now I want to have my office in Beijing. Let me take this company from Shanghai to Beijing. No, does not work like that. There are legal and tax consequences around the location that you choose in China. First of all, registered office address is a must for any type of company registration, and it must be your operational office as well. It is really bad if you choose a location because you've got certain benefits, but then your people are sitting in another office in another district. Doesn't look good, especially when you get surprise visits from different government offices. Virtual office addresses, if they are provided by a law firm, so law firms have the ability to use their registered office addresses to give to their clients upon application of the companies, but it's an interim solution. The goal is that eventually you find your own office, but it gives you that time, right, to use that registered office address of your law firm. Clients who forget to find locations or have forgotten that they have to do it as an activity, we have found that banks will freeze their accounts until they're finally in a registered office address. Or alternatively, you get government inspections coming and nobody knows how to handle it. Penalties could arise. Like I said, in the worst case of one client, it was that their entire bank platform at China Merchants Bank was frozen. And it took, I think, 4 months to fix. 4 months of money being able to come in, but you had no visibility over the account and you couldn't pay anything. So a lot of difficulties. A 1-year lease agreement must be signed. Any agreement at the point of registration will be denied. So you've got to make sure that your lease agreement is at least 1 year old. You've also got to make sure that the type of property that you're choosing fits your business scope and the activities you're saying you're doing, together with your entity choice. For example, if you've got a manufacturing business scope, you need to be located in a factory or warehouse facility. You can't be located in a commercial building. People are going to say you've got a manufacturing business scope, but you're what type of manufacturing are you doing being in a commercial building? Trade and service can be in commercial. Retail business scope, you have to be in a designated retail shop. Please do notice I have not highlighted here residential locations because that is not permitted. In addition, unlike other jurisdictions around the world, only one company can be registered in one registered office location. This is registered with the Real Estate Bureau, and they do keep track of this. When you go into a location, one of the questions you have to ask as part of your due diligence is, has the previous tenant been removed from the registration with the Real Estate Bureau so that you have easy access to that space, okay? Now, I do want to highlight that there are promotion zones. No, let me rephrase that. There are zones in China, and I'm thinking of one particular one in Shanghai, whereby you, this is a new international hub in Putuo district of Shanghai, where they're trying to attract new investment into this hub. It is run by the Putuo district government. As an incentive, this Putuo district government is offering virtual office spaces, but you do get an actual office number, and they're offering this rent-free for 2 years. Great. Absolutely wonderful incentive. I've moved a lot of clients into this location. And if the client ever wants to actually get a physical office, they're full of spaces available. Now, this is a government offering these incentives. If the government is offering these incentives, it's all great. If it's a private company offering these incentives, I would definitely be wary and check whether it's a legal contract that you are signing and not that you get into trouble and have to pay penalties at a later stage. Now, the biggest legal consequence is suddenly realizing that the location you have chosen is not for you. It's not strategically the best, and now you want to change cities. I'm going to use the Shanghai-Beijing comparison. If you set up in Shanghai and you realize Beijing is better, actually, a couple of options available to you. One is you keep Shanghai and open up a branch office in Beijing. Another is you set up a new company in Beijing and shut down Shanghai. They are two separate government jurisdictions, like imagining setting up in Germany and the other one's Austria. It's two separate jurisdictions. So you really have to keep that in mind. The tax consequences of selecting your location in China. Each city is made up of districts. Each district has its own tax bureau. When you choose an office space, you are registering your company in that city. My company is registered in Shanghai. I have registered with the Huangpu District Tax Bureau, okay? Because my registered office location is in Huangpu District. So this is something that you have to keep in mind in terms of the tax registration. Next question might be, are there better tax bureaus compared to others? Yes, there are. Now, tax incentives may be offered by state, local, or district governments. Now, this example I gave you of Putuo District in this international hub, they have been able to negotiate with the Putuo Tax Bureau that you can get a certain amount of percentage of rebate on profits tax, individual income tax, and value-added tax. There are different ranges of what that rebate looks like in terms of your profitability as a whole within the company. Fantastic incentive, attracts more people. Not only do you get 2 years rent-free, but you also get these rebates. The question is that these, no, not question. The fact is that these incentives are not forever. In Qinghai, which is a district in Shenzhen, they had a profits tax incentive where they lowered the profits tax rate for all companies registered there from 25% down to 15%. Amazing. At the end of, I want to say 2025, December 31st, 2025, I could be wrong, guys. I don't have to look back on my memory. That incentive will be revoked. Meaning that from the 1st of January, 2026, all companies registered in Qinghai will be at the 25% profits tax rate. So do not do your planning or feel assured that these incentives are for life. They are not. They are there to incentivize you to go there. And nobody knows how long they are going to last. So I just want you all to be aware of that. Another thing I want you to be aware of is to do a tax planning forecast. And that's why I'm talking about creating a budget, understanding how much capital you need. When do you plan on being profitable in China? That these tax incentives can actually be utilized. Most of my clients need 3 to 5 years just to break even. Some clients have a fantastic business model because they've already been transacting with China for a number of years, that literally they set up the company and within 2 months they're transacting, generating revenue, and they're profitable by the year end. It's rare that this happens. Most of my clients are startups starting up their businesses. Do not fall for this trap that you choose a location because of a tax incentive, but actually you only plan to be profitable in 5 to 10 years. Who knows if these tax incentives will still even exist? Another thing you need to think about is if you wish to change office space. So I'll use Woodburn as an example. We're based in Huangpu District. If we are growing and scaling, actually we've downsized our office space due to COVID. We've gotten a smaller space because we've got now this remote working policy. So we're saving rent. So I just want people to keep that in mind. If they are having remote working policies, like think very carefully about desk space and whatnot. But if you do need to increase, try and stay within the same district. So if it was me at Woodburn, my goal would be to stay within the Huangpu district because I would want to stay with my tax bureau because we've developed really good relationship with not only our tax officer, but several officers within that bureau. And I wouldn't want to start, I really couldn't be bothered, to be quite frank, to start fresh again. If you need bigger space and you realize Huangpu district does not offer that to you and you need to now go to Channing district, you have to do a closure audit with the Huangpu Tax Bureau to then reopen with the Channing Tax Bureau, okay? This could mean that for a certain period of time, you don't have the ability to purchase fapiaos. Again, it's by district. Understand that in Shanghai, There are between 13, 15 districts, which means there are between 13, 15 tax bureaus. And each tax bureau has a KPI in terms of how much tax revenue they have to earn. They're not going to want to lose you. They're going to want to earn those tax dollars in that year, in that fiscal year, so that they hit their KPI. Understand they're going to make your life difficult to move. Okay. Now, as a startup, what would I recommend in terms of registered office address? I think if you are not clear about the number of headcount you want, and actually you might even be in a phase where you don't even need headcount, definitely try and go with the options that are available, like the Putuo district, where you get 2 years of rent free. I recommend going with a government agency to have that benefit. If you feel like you're going to have staff and you're going to start off with one person, business center is always the best option. You have everything there. And if you get surprise visits from government officers, you know, the business center has a receptionist that can greet them. It really does look like an office. I would only go to an operational office if, first of all, the rent makes sense. And if you need, I would say maybe 3 or 4 more workstations, 3 or more workstations. But even there, you can find business centers that are really affordable that you don't, like you could stay there even with 3 people. So make that cost calculation. Step 4 is finance. The 7th decision that you have to make is around, sorry, presentation is slow to change. The 7th decision that you have to make is around the bank. Now, when you are in the incorporation process, the bank is going to do their due diligence on you. I think you should do your due diligence on them. Do your homework, right? Understand which bank fits your criteria. What services can they offer you? Are there any requirements around those services? Understand what are these requirements. Now, as of August 2020, it is a requirement of the People's Bank of China to come to your office, which again is why you need to have a receptionist or somebody who can take them on a tour, like the government at the Putuo, this Putuo hub. The government is greeting the PBOC, and they've already aligned with the COC an exemption that they don't have to come and visit. Make sure you're aware that these visits do happen. The incorporation phase does require the original passport of the legal representative. The original passport does need to be flown into China. In a place like Shenzhen, the original passport is not enough. They actually want to meet the person. We just have a relationship now with China Merchants Bank where they don't require to see the original passport of the legal rep. This is in Shanghai. It's really important to analyze what is required as part of that document list. It does take between 30 to 45 working days to get the full capital account and renminbi basic account opened. And then after that, it takes an additional 10 working days to get the online banking platform opened. There are limitations with every single bank in China in terms of online access. You cannot get online access if you're using a Mac computer. You cannot get online access unless you use Internet Explorer 11. You have to make sure all the firewalls are pulled down, otherwise you also won't gain access. For example, for me, I can only gain access to the online banking system from home because there's no firewalls. I don't have a Mac, so I'm fine. And on Microsoft Edge, I've been able that when I open the ICBC bank account, I've been able to do it with Bank of Shanghai too and China Merchants Bank. It comes up on the Internet Explorer 11 platform. Keep all of these limitations reminded. I don't see anything changing in the foreseeable future, and it is a limitation for everybody, okay? Obviously, if you are in China, it's not really a problem. Once the bank account is opened, your designated registered capital or a part thereof is transferred over, and then you can start using the funds. Now, the account opening process is a one-time process. It should not determine how you choose your banking partner, okay? A banking relationship is a lifelong relationship, right? It needs to last the full validity of your organization. You want to have this long-term partnership. You want to have this long-term relationship. Questions I would check are, do they have an English-speaking relationship manager? Are they located near your office? What services in terms of credit lines or, I don't know, anything that you might need to transact in China? Do they offer loans, even though you might not need a loan right now? Do they offer loans? This is the homework that you should be doing, not necessarily how to set up the account. How do you run and maintain the account in the long term? The next decision that has to be made is around value-added tax. Now, VAT is a sales tax. It's a major source of revenue for the Chinese government. There are very rigid rulings and systems. And yeah, it's part of the golden tax system, basically. And there are two statuses. In China, you can be a general VAT taxpayer or you can be a small-scale taxpayer. This is, again, where I would recommend doing a simulation based on the transactions you foresee within the company. Does it make sense from the get-go to become a general VAT taxpayer? Or does it make sense to start off as a small-scale taxpayer? And as you grow and scale, you either apply to become a general VAT taxpayer, or you wait until the trigger kicks in that you automatically get upgraded to become a general VAT taxpayer. Once you are a general VAT taxpayer, you are a general VAT taxpayer for life. Again, these simulations better to be done prior to the establishment so that once you're set up and you have your tax registration, it is very clear what status you are going to apply for. And to finish, decision 9. I have not put this under the corporate structure because when you say appointment of the finance manager, most people make the assumption, yeah, we'll just appoint our CFO in our headquarters to have this role. No. When you appoint a finance manager, this appointment needs to be done at the point of establishment. So when you choose the executive director, legal rep, supervisor, GM, you also have to appoint the finance manager. This person needs to have a Chinese mobile number. And you have to understand that once the company is tax registered, or let me rephrase that. Once the company is established and you do the tax registration, it's this individual who is going to represent your company to apply for the tax registration with the tax bureau. You want somebody who knows how to deal with tax officers. You want somebody who's familiar with the application process. And you have to understand that for the tax bureau, this is the main point of contact, okay? And they will want to have a Chinese mobile number. An overseas mobile number will not be accepted. Most communication nowadays is done actually via WeChat. So the question is, are you going to outsource your accounting and tax, and therefore this provider will appoint a finance manager? Or are you going to plan on hiring somebody who will act as your finance manager? Or what are you going to do, right? For most startups, the easiest methodology is actually to outsource the full service, or maybe not the full, maybe part of it, and appoint somebody from that outsourced solutions provider to act as the finance manager, at least for the first 6 months to 1 year of the startup phase. You will find that by outsourcing your finances, the cost, finding the talent, the recruit, I mean, all of these things I've highlighted here will just be a headache off of your shoulders. You don't have to recruit. You can focus on your core business activities. You want to find an outsourced provider that is specialized in what you're doing. For example, if you're doing a lot of export, you want to make sure they know how to do VAT refunds. You want to make sure that they have English and Chinese capabilities. We have found that to be probably the #1 important aspect in relation to working. So think about this again prior to starting the establishment, because you do have to appoint this finance manager. The next step we're going to look at is documentation and processes, and I'm going to try and go quickly as possible through this. An extensive list of apostilled legal documents is required, highlighting the government's intent to gain comprehensive knowledge of who the shareholders are and who is in the corporate management. Documents must be signed in Chinese, but it is highly recommended to go with bilingual documents that are English and Chinese simultaneously. And you also have to use a black ink pen like this to sign any documents. The process is relatively straightforward. You've got to sign a lease contract, information. So these key decisions, in our case, we provide a questionnaire. The client has to fill it in with the key decisions that have to be made. We use that to do the online application with the Administration for Market Regulation. Then once that online application is approved, we have documents generated from the system that we prepare that have to be signed by the shareholders and corporate management and submitted in original. Then comes they're submitted in original, you get the business license, and from there on are all the post-registration steps to get special licenses, bank account opening, tax registrations, customs registrations, import-export registrations, etc. Then you have the bank account opening, which is done simultaneously with the post-registration steps as well. Document list is pretty extensive. So this is what is generated once you've completed the online application. This is page 1. And obviously I've put Chinese and English versions because that's what we're looking for. And that's page 2. So there is a whole stack of documents, right, that needs to be signed and signed off on in terms of this. Mitigation, risk mitigation, and compliance. What are the problems for foreign investors when they are actually establishing their companies in China? The first is that they are unfamiliar with the incorporation process. A lot of people take it in their minds, well, we're setting up a company, it can't be that different from how we do it in Hong Kong, how we do it in the US, how we do it it is very different. Okay, so really make sure that you understand the incorporation process and that whoever is your incorporation agent is transparent with that process. If you don't understand the timeline, now most of the time I don't understand the timeline because pretty much for every single client it's different. But there is a standard timeline that we estimate around, if you will. A lot of that timeline depends on the client, depends on the incorporation agent, and depends also on the government response. Right now, at this very moment in time, establishing a company, you have to expect no feedback from anybody for the next 2 weeks for Chinese New Year. I already have had this week a lot of government officers and tax officers on holiday, not to mention my own staff. Next week is whole public holiday. The expectation is by the 19th, everybody will be back, but there could be some people who have extensions, especially those that don't have children. Schools restart on the 19th of Feb, but those who don't have kids might still be off. So timelines are tricky, especially when we're looking at public holidays around that. Confusion around the document list, completely understand it, because again, it's an old-fashioned process. Although there is the online application, you still have to print out all of these original documents. Now, one thing that I have loved since November is that no documents need to be notarized by the Chinese consulate. It's just an apostle that you have to go to your local government to get apostilled all the documents. Pretty straightforward, also saves a lot of time now. People are astounded by the amount of documents. They're also astounded that they have to sign with a black ink pen. We just got a client, had 4 directors from the shareholder having to sign documents. 2 of that 4 did not read the emails carefully enough and signed with a blue ballpoint pen. We need to re-sign the documents. We can, of course, negotiate and try to submit, but there's absolutely no guarantee. The tax officer will say, no, the rule is black ink pen, right? I have met a lot of companies who have worked with incorporation agents or even law firms who did not know about the key considerations needed to be made and later discovered that some of these key decisions were actually done without their knowledge by law firms. I'll give you an example. We just acquired a new client who did not even know who was appointed within their corporate structure, only to find out that 3 people from the incorporation agent were in that structure, meaning they had full ability to make decisions on behalf of the company. This transparency is not okay. It actually prevents you from growing and scaling your business and prevents you from having the clarity to make decisions. You have to take the time to go through these 9 key decisions, understand how you're going to operate that structure. If you understand that and you've gone through that and you say, actually, no, I want to outsource these corporate management structure roles to XYZ, fine, but at least you've thought about it. Not that somebody else makes that decision for you. That's not okay. This is your company. You should be making these decisions yourself. And you should be aware of what those decisions are. So to mitigate the risk, make sure you've got this transparency and clarity over what you're doing, what you're establishing, and ultimately remember that this is the foundation of your future business in China. Okay? You need to know what you're signing up for. Ultimately, you need to have that transparency and clarity. When you choose an incorporation agent, just make sure that you understand the processes, timelines, understand how they're going to give you feedback on where you are week by week. It's really important to have that knowledge level. One thing that we do with our clients, and obviously we are a corporate services firm that helps to set up companies in both China and Hong Kong. We have, in order to mitigate risk and give more transparency to clients, we have calls every 2 weeks with our incorporation clients, that everybody is on par where we are. Is there a roadblock? Is there something we're waiting for? Where do we lie, basically, in that process? Every Friday, we send an updated report to each of our incorporation clients that they understand where in the process we are, what is left to do, and what are the estimated timelines. Again, they're only estimated timelines, but we take on average what we expect, and it gives clarity to the individual. When we hit each step, we also notify the client, okay, you've got your business license, you've got your chops, you can sign contracts, but your bank account is not open yet, so you can't receive funds or pay anything out. But maybe it's going to take, I don't know, a month or 2 months to sign a contract, in which case then they'll be ready. But it means you can start activating your business even sooner than you expected. We have one client that we just got their business license and stamps. They have now contacted their customer, and they're now starting the supplier due diligence to become a recognized supplier of this customer, which takes in itself 6 weeks. So he's already speeding up the process. So make sure you work with an incorporation agent or a lawyer that gives you that clarity. Now, if you are planning on setting up a company in China and you'd like to have a conversation with us, because this is one of our core services, in my follow-up email, I'll be sending you a link to my diary. I'm more than happy to have that conversation with you. We are also recording today's session. So although we don't hand out the PDFs, there is going to be the recording on our YouTube channel so that you can rewatch this as well. And if you haven't joined our WeChat community, this is the QR code to me. We have a WeChat community called the Thrive in China community. We have over 350 business professionals where we come in, and every time there's an issue people have, there's a bunch of lawyers, marketing agencies, and people in there that may be able to guide and help you, or even just share their experiences. So connect with me, type in Thrive in China, and I'll connect you to that WeChat community. Last but not least, because of Chinese New Year next week, we do not have a roundtable. But on the 21st of February, we are talking about determining your startup funds for your China venture. 28th of Feb, how to recruit your first employees in China and what to think about. And on the 6th of March, we're going to be talking about the supervisor role, which according to the new company law will be eradicated. But again, we don't know for what size company it's going to be eradicated on. So we are going to be touching on that on the 6th of March as well, and going in depth a little bit more about the new company regulation on that. So for each roundtable session, you do need to register. If there's any that interest you, go to our website. They're all up there already. Register for what you would like to participate and join in. No questions have popped in, so I want to thank everybody for joining me. And for those of you watching on replay, if you do have questions, again, reach out to me. Happy to have a conversation to go through it. I wish you all a great day. Take care and goodbye.